This is Benzinga Live with Spencer Israel and producer AB. What's up, everybody? How we doing?
Someone told me buy high, sell higher. So.
Let's get Matt Hammond on the show to talk some IPOs. Jake Wojacek from Trend Spider. We have a
breaking news. What is up, everybody? It's Wednesday, hump day, one of the favorite days here in the Benzinga office. Biggest news today, of course, so far has been Netflix earnings yesterday afternoon. Stock trading up more than 14%. Of course, we have Tesla this afternoon after the close. So Netflix and Tesla, two of the biggest headlines today. We'll talk about that. Quick agenda rundown for the show today. I got my man Options Mike hanging out with me in the background. We're going to bring Mike on here in about 2 minutes, run through some charts with Mike, see what he's been watching. At around noon Eastern, we will have David Green on from Wall Street Global Trading Academy. And then after that, we might get a surprise visit from Money Mitch, as he's not doing a stock market movers today, so might be joining us on Benzinga Pro, on Benzinga Live. As I say, we're looking at Benzinga Pro here. I do have to, got a note from our producer yesterday that we need to put the watermarks on. Got to figure out how to do that. Here we go. Watermark, there we go. So now you guys will be able to see what stock we're talking about. The zoom in doesn't work. All right, I don't know. I might have just screwed that up. I don't know how to get off here now. All right. Trying to make these charts better for you guys. You know who has better charts than me? Is Options Mike. So I think without further ado, once I get a sign from Mike that he's ready to go, we'll go ahead and give him our special intro, bring him on the show, and see what he's all right, we're all good, he says. All right, guys, and let us know in the chat if you guys have any stocks, any trade ideas, any things you're looking at. Let us know in the chat, and we'll see if we've got time to check them out. So without further ado, let's go ahead and give Mike our special intro, bring him on the show. Mike, how's it going?
Hey, what's up, man? How are you?
I'm good. How's the puppy?
He's on the mend. He's got himself a little stomach infection, so we're taking care of that.
Oh man,
Lots of meds.
Puppy's no fun.
Never fun. How you guys doing there? How's everybody out there, Benzinger Nation?
We're good. Zinger Nation, how are we doing today? Here in Detroit at Benzinga HQ, things are quickly changing. It's really chilly in the mornings, so that time of the year.
Yeah, Duke had his first frost this morning. He was trying to figure out what he's putting his feet into in the grass.
Wow. Yeah. Where are you guys again? In New Jersey area or something?
Yeah, New Jersey.
Yeah. So maybe he'll get to see some snow too in the wintertime.
Oh, for sure.
All right. Well, let's go ahead. I'm going to pop your charts up. Let me know what we're looking at here. Looks like we've got S&P 500.
Yeah. So, I know everybody's kind of being driven crazy by this market, and it really is crazy. And if you think about what's going on here is, last Thursday, the market looked like it was going to fall apart. Instead, it reversed. We had one of the top, Chris in my room post, the top 3 biggest reversals we've ever seen here in this intraday, from -2% to +3%, and it caught everybody screaming short, and that chased into this.
That was last Thursday. That was after the CPI report.
Yeah, after that CPI report. All right, and then to screw it, everybody, we got a real nasty candle on Friday, and then we gapped up on Monday, and then yesterday we gapped up, and then we sold off all day long, and now we're chopping around. And a lot of people are like, "Oh, what's going on?" I'm like, I think this market's trying to find its footing down here, and it's really kind of waiting to see what earnings are. We are in a quiet period, right? Next week there's no Fed speak, and we have 2 weeks from today we get the Fed decision, which we all know what that's going to be, so that's just a foregone conclusion. You have no real data this week, so we're looking at earnings report, and so the market here is saying maybe we can bounce, maybe we can get a little cute bounce in here to end out October. It's trying to, just no power.
And I mean, today's price action, we opened lower, moved lower, reversed, came higher, reversed again. Now we're back trading lower, but still the S&P 500 over the last 5 trading days up more than 5%. So you can go back on the chart, and we were trading in the 350, 340s even on October 13th, and here we are at almost 370 today. So I don't mind, I guess, seeing like a little red day if we close down 0.5%, whatever. We can't expect to go straight up. I'm not going to get too worried about that. I guess I'd be concerned if we go straight back to those levels we were at last week.
The big area to watch right now is 362. That's been the spot that was the June lows, and we've been fighting over that. And you can see if sometimes you just have to come out here and just make it easier for you to see here. Yeah, we'll just use this nice and easy. Righty, so if you come into here and you put it at 362, you can see this area has been fought over and over for the last 3 weeks, right? This is the spot we keep coming back to. So as long as we kind of hold above that area, I think we're okay. There's the weird part. Typically, what we're all used to in a market is, the market loves when it gets shorts trapped to squeeze them. And you would have thought this week that after we got this nice move here, right, and we started to push up, you would have thought we would have gotten a nice big squeeze up here, and we could have, oops, come on. There we go. We could have pushed up to this 380 area here on the SPY and really kind of squeezed them, and then maybe even all the way up to the 50-day, which is eventually where I'm thinking we could try to go. And instead, this market left everybody off the hook, right? If you were short this market, it said, okay, you can try to sell here, you can get out. And this is not something that we're used to. We're used to the market when it has the shorts on the rope coming in and just really, beating the hell out of them. And then you get these big moves up because everybody's covering to get out. They're creating more buying in the market.
Yeah, I mean, and like you said, so we're watching that level from the June lows. I think a lot of people just think there's no way we've already bottomed. Is there any, sign you watch on a chart to try to identify a bottom like that? Or is it really one of those things you're not going to know until we're looking back, months later and saying, oh yeah, that was the bottom?
The real thing with the bottoms kind of present themselves, AB, right? Typically, they're marked by some big reversal. So if we were to look back on this chart here, you could look at candles like this where you get follow through, you come from out of the Bollinger Band, you get a big intraday reversal, and then you get some follow through. You typically see a big volume on it. We had that here. And you typically see some good call buying that comes in with it. That's the one thing we've kind of been missing in this market. There has been no real call buying that's been coming into this market yet. And so with that being the case here, the market's kind of saying, maybe we're not so sure. Maybe they're just waiting to see what earnings are. And sometimes in a market like this, a bottom takes a while. And I'm not convinced that the bottom is in this market. I think that we potentially have a tradable short-term bottom where we could push up and get a bear, a bull market rally within a bear market like we've had a couple times here. This was a very nice big bull market rally in a bear market to the 200-day. And ultimately, I think if this market, we have good earnings, we could try to push up to that. But, that doesn't mean this is necessarily over.
Yeah, and I think right now, right, we're at such a pivotal time in terms of the earnings season, figuring out exactly what the Fed's path is here, right? We know, like you said, what the next FOMC announcement, what it's going to be, and it's going to be, 75 basis points. But we don't really know beyond that, right? We think they're going to go up to 4.5 or whatever, but are they going to go beyond that? Are they going to have to? Is inflation going to come down? All these things we don't really know. And as it stands, this is why it's so funny, and I talk about this a lot, but looking at charts and technical analysis, it's like, oh, when you're at this pivotal time in terms of news catalysts and macro things, you also have the chart being at like a pivotal time. They happen to coincide more often than not.
Yeah. So, you have right now the market trying to push up, and the 21-day for me is the area we have to hold over. So, we've been stopped at it last, 2 weeks ago, we couldn't break it. This week, we stopped at it on the first attempt to take it out. We gapped over it yesterday, then went right back to it. And here we are dancing on it. You need to get a good, strong close over it for this market to get going. And your risk at this point is, if you're long this market here, I would use 362 as the area you have to keep closing above. That's the big spot. Under that, I think it opens the door for potentially a retest back to the lows. And we're very news dependent, right? It's not just what's going on here anymore. The market's now carefully paying attention to what's going on over in the UK. This is a first for all of us. And if you look at what else is going on, you have bonds again at a new multi-year low today, the dollar strengthening back up. These make it very tough for the market, especially tech names. They do not like this action. So, it's a time to be careful. And, I keep trying to say this to people, you don't have to trade every day. For me, yesterday was a huge day. Monday and Tuesday were okay. Today's been okay, but it's about finding those right days to trade and be more aggressive than not. And, when it's this whippy like we have today in a very tight range, it's a good time to sit on the sides or play the few names that are in play.
Yeah, I see Jay Rice in the chat saying he personally thinks bottoms are in for year. Here's what's so interesting to me is I think you have a lot of, and if bottoms are in for the year, or if we've seen the lows of the year, then it would have been less than a week ago, last Thursday, like we said, that CPI day that morning. And that was a crazy volume day. If you look at like the volume traded on the S&P 500, that day stands out.
Right.
As almost double the volume of the day before and the day after, which you do typically see that when you're going back and looking at if you go back and look at the bottom in March of 2020, you can see that volume was really high that day. I'm not going as far to say that, but there obviously was a lot of volume there. I don't know if that was
But we had a lot of volume on the February on that low, right? It was even more, and a lot of volume back in January on that low. These are even more. Again, bottoms will present themselves eventually in the market. Right now, we're in a bear market, and everybody's searching for a bottom. And I think you just have to stop putting a number to it for a lot of people and just say it'll present itself when it's ready. We'll see it, and then we'll go from there. We're trying. We're trying here. It feels like we're trying to form at least a short-term bottom down here. We're trying to hold this area.
What about, and I feel like though, and to Jay's point, or to the idea that maybe that we I guess just devil's advocate, why people could be bullish down here is that if we form a short-term bottom and sentiment starts to change, like you said, call options have been missing from the market. People start to buy call. I think like all these things, next thing you know, we're looking at, okay, we would need another 10% drop to get back to bottoms. I could see that happening in the next 3 weeks. Again, I'm not making that call. I'm not ready to. But what I was going to ask is what about people who might have gone short, like just because we made new lows last Thursday or whatever, right? Like a lot of people who are bearish or, trade on the short side will say like making new lows is bearish. So you expect that to happen. And really, since we've made new lows, we've gone up since then.
Right, because what happened here is sentiment was just so nasty. On that day with CPI last week, everybody was already bearish, and it got even worse on the open, and people were trying to short the hell out of the market into the lows. And it created a feeding frenzy. All you needed was one big buy program went off, and that started it, right? And you just saw these for about 35 minutes. That's when most of this candle was in 35 minutes, if you believe that. That's how aggressive that buying was. But they caught people short. Right? And so now the shorts are trying to reload in here. They're figuring it out. I mean, to me, the market needs a reason. We need a reason to bounce. The macro environment, something has to change, right? For this market to have a bottom, inflation needs to be being tamed, where we get the idea the Fed's done what they're doing. We need to see a strong earnings report. The one thing I'm hearing from everybody talking about earnings so far the last 2 weeks is they're all citing headwinds from Forex, right? Currency problems. And that's going to be the theme of this earnings season. Everybody's going to be talking about for guidance going forward, how the strong dollar is hurting them and can continue to hurt them.
Yeah.
But if they're better than expected and guidance is better, like Netflix, Netflix was a surprise today, right? Nice big surprise, broke this range, beautiful gap up, almost to the 200-day. They also warned, by the way, they mentioned about currency headwinds, but they on subscriber growth, they have their whole news model out now with ad supported. It'll be starting to premiere it next month here. So, you got to look for your opportunities. And if you get some more names like this, that could lead to turn around the markets.
Yeah. What about, you mentioned Netflix. Do you have any other like individual names that you have been looking at charts?
Yeah. I mean, I've been, to me, Netflix was easy because it was in such a range, right? We were range bound between 252 roughly and the 315 and 215 area. So we knew it was going to break that. So that was a great one. For me, I'm keeping an eye on Microsoft with earnings next week. This name has been constantly one of the best producers, been beaten up. Their cloud is killing it on cloud. They're doing great. You're looking for a change in this one, but right now it's trading with the market, right? couldn't hold the 21-day like the market's back below it here. Looking for a change in character on this chart to get back up towards that 250 level and see if we can push back up. You're talking Tesla tonight. That's going to be an interesting one to watch because, this name finally capitulated after being one of the strongest names in the market when the market was selling off. Last week, it finally put in a new 52-week low. So the question now is earnings enough tonight? What are they going to say about their earnings? How are their profits? What are they seeing and how do they guide? What kind of forecast do we get?
Yeah. What about as far as market impact of Tesla's earnings? I mean, if Tesla's earnings are bad and the stock's down, do you think the whole market's down tomorrow? Do you think no, it doesn't have that it doesn't have that weight?
It's not like an Apple, which can actually just move because Apple's so overweighted, the markets can move them on their own. I think what he says or what they say, and he'll be on the call today, he'll have a lot of weight. If it's strong, the market may try to rally, but it depends where the money's coming from. And it depends what they're saying and they're seeing. And I think it's tougher for a name like Tesla to move the markets. Tesla tends to move on its own and tends to move to the beat of its own drum. Even when the market was rallying last week, it was weak, right? It doesn't always trade with the markets. It often can trade against it in either direction. I think if they come out and everything's rosy, though, that would be a good outlook for the market. And that might inspire some people to go nice and long.
It feels like the market doesn't, or at least today, sometimes you'll see a run up into a Tesla or Apple earnings as people are anticipating a good report or people buying calls, all this stuff. It doesn't seem like you're seeing a lot of that today in Tesla. The stock is up, but a little bit less than 1% right now, or about 0.5%. So. I don't know. I'm excited for that one because I think that's about as big of a coin flip as you have in terms of is the stock going to be up 10% or down 10%? Because expectations are low. But Tesla could very... Go ahead.
They are. And if I remember correctly, Tesla hasn't moved as much the last couple of times as it used to. It seems to be a little bit more of a muted response the last couple of reports.
I think, yeah, I mean, I think so, definitely, compared to a couple years ago. And Tesla's had crazy growth over the past, 5 years in terms of the, not just stock growth, but in terms of deliveries and revenue and all this. So when people talk about how much the stock appreciates, it's like, yeah, it has, and is it overvalued? Probably, but it's also had insane growth as a company. So you have to factor that in somewhat. But, the bar's low, but Tesla could very easily come out and say, like, yeah, we expect this next year to be even harder than we thought. We don't know what they're going to say. We have no clue.
Well, and plus they do so much business overseas. They have their whole big Shanghai gigafactory now that they're in there, and that'll be a big test for them, how that's doing. And you have their Germany plant coming up and running. There's a lot of interesting spots they can talk about, and it depends where they're going to focus this earnings session on and what they have to say. Again, Tesla's the best right now of the EV names, so that's going to set the tone for the rest of them. If they are bad and they're showing signs of distress, well, that's going to send that whole sector into a tailspin.
Yeah. Let's see. I'm catching up on the chat, seeing if we've got any. Jay was saying that yesterday Netflix was down prior to earnings. That's a good point.
Yep.
I don't think the day of action is really indicative of what the stock's going to do.
It's not. In fact, a lot of times it's wrong.
But I think what it can do is show you how other market participants are viewing. It sounds because think about Netflix going into earnings yesterday, unlike Tesla, had already been up 40% over the last 3 months. Tesla is basically making new lows going into earnings, whereas Netflix had been. You could make the argument. I was thinking this was getting pretty crowded, heading into earnings. Maybe some people thought, since the stock had already gone up from 180 to 240, that trade had played out and they were getting out of it before the earnings. They had already made their 10, 20, 30% on the stock. Didn't need to hold it into earnings, whereas Tesla, it's at the bottom. So 100%. And like you said, Micah, it's wrong a lot of the times. But Tesla at kind of a different spot in its chart than Netflix going into the earnings.
The one I want to watch tonight is Lam Research, LRCX. And, for those of you not familiar with Lam Research, they produce the equipment to make the semis. So it's not what they report to me, it's what they guide to. Because we're seeing such weakness in the semi sector, and we're in a major correction in the semis here. If their guidance is bad, that will play poorly upon the sector going forward. And we know, Nvidia and AMD have already come out and pre-guided down, right? AMD pre-announced a couple weeks ago. We know the semis are not doing good. So what LRCX says will have a very big, profound effect upon the semis. If their guidance is bad, that's going to tell you that people aren't buying the equipment right now to produce more chips.
Yeah, and I think we saw the semis get crushed for supply issues, and then now we're starting to see, like you said, the demand kind of wane, at least in terms of for like Nvidia and AMD, gaming cards, crypto mining, all these things, a little bit lower demand right now. So not surprising to see the semis trading down, and we'll see if, like you said, the companies are buying less manufacturing equipment to make new semis.
Yeah. A couple other interesting things tonight. You have Old World Tech tonight with IBM. And, what they have to say, and, this will be a big one to watch for Forex issues because they do so much international business and how they trade after this one. And then we're going to get a look at some metals. You got Alcoa tonight. If this is strong and they have a good report, it'll tell us, well, the economy's strong if people are buying and they're guiding up, right? That means there's still a lot of construction going on. There's a demand for aluminum. You have Steel Dynamics tonight. I think you have Freeport tomorrow morning. So you have and Chevron, I think you have a rail tomorrow night in CSX. So you got to look at a lot of broad sectors in this market this week. The banks have already reported, and most of them came in much better than expected. So if the economy starts to look good after this smattering of earnings that go across different sectors, I think we could see a bounce in the market. Now, if they come in, they start really bad, and it's all about guidance, guys. And that's the one thing I always tell everybody. It's not about the numbers they report, the market's forward looking, it's about what they guide. And if guidance isn't good, that's a problem.
Yeah, and I think a lot of companies are kind of erring on the conservative side and either throwing out really low guidance or removing guidance altogether and saying, hey, we don't really know what it's going to look like in 2023. We could be in a big recession, or we could be completely fine. Like it's very up in the air right now. I think a lot of companies have an idea that things aren't going to be, all roses and peaches the next 6 months. Things might be a little bit tougher, but I don't think companies know how, bad or how normal things will be. Some companies probably know better than others exactly how their revenue is looking for the next 6 months out to a year, and those companies are probably the ones that are keeping guidance, whereas some are removing them. But whether it's Microsoft, Tesla, a lot of these companies have come out and given these warnings, so the bar is lower. The stocks are down 30% from their highs. If they come out and say, oh yeah, things aren't perfect, but they're actually going better than we expected, I think those stocks, a lot of them have room to come back up.
Well, look at Netflix. They guided their subs down to 1 million last quarter for this quarter, and then they beat it with 2+ million. And so to your point, they played that game. They guided down. They had a huge beat on it. And now they're not issuing guidance on subs anymore, which is probably fine. We don't really need that. I think the one name we should all be watching next week is Apple, because there has been so much. I know you got to go out, buddy. There's been so much news about Apple.
I'll let you go here. Yeah, Apple.
And that phone and how it's doing or it's not doing, and so what they say, and Apple hasn't guided since the pandemic, so that remains a problem. But what they say and how they talk about their outlook will weigh heavily upon the market next Thursday. That will be a huge one for next week.
Yeah, 100%.
And somebody asked about ASML. It's up, but they guided weak. Their guidance was cautious. FYI. Good beat, but guidance was cautious.
A lot of times it's all about the guidance. And I did see some people making the argument that Netflix's quarter wasn't that great and the stock shouldn't be trading up that, I don't know, it sounded like maybe they had some puts going into their earnings or something. I don't know. But
they beat on revenue, they beat on EPS, and they had huge beat on subs. They have their new subscription model coming out. So there's some optimism there.
Yeah, and I mean, you can see it both ways. Like Jay's saying in the chat, you can say it's okay. It's down from 700 still at 270. It's down a bunch still. Or you can say, well, it's already up to 270 from 180. It's already up, 50% from its lows, I don't want to buy it now. So, either way you look at it. Mike, always a pleasure to get you on, man. I'll let you take out your dog. Enjoy the rest of your Wednesday, and we'll chat soon, okay?
Thanks, AB. Nice to be on. Guys, take care. I'll catch you guys soon.
Yep, and I'll drop your Twitter in the chat. I'll drop Options Mike's Twitter in the chat, so you guys give him a follow there. Yeah, Jay Rice, I understand you can make the argument that's down from 700. My point was, though, that I could see that yesterday heading into Netflix earnings, people who were long the stock from 200, say at 240, said, okay, I'm up 40%. I can sell some here heading into earnings. Was just why I get, I could see that being a potential reason why Netflix was down yesterday heading into earnings. People that had already made a decent little chunk of change going long the stock, I'm not going to risk it in case the stock's down 15% tonight and I'm going to take all my profit off the board, so I'll sell some. I don't know if that was the case. I was just speculating. Joseph Taylor wants an explicit price prediction for Tesla tomorrow. So, first of all, not investment advice. And if you're trading on earnings, whether you're buying the stock right before an earnings or you're trading options right before it, it's a gamble. I personally would do it the options way. You're saying, should I set up call options for the end of the week? If you do, and if you want to, by all means, go ahead. And again, this is not financial advice. Just know it's a gamble. And know it's no different than going to the casino and what you would put down at the blackjack table. If I knew if Netflix was going to be up or down tomorrow, I wouldn't be sitting here talking to you guys on YouTube. I'd be like on a yacht somewhere because I'd be a billionaire. But I could make my best prediction using information available. Let's see what my man DG thinks. Go ahead and give DG our special intro. All right, wait, hold on. All right, one sec.
Down.
Mr.
Yes,
DG,
sir.
David Green, how you doing?
What's up, Aaron? What's up, my Benzinga family? What's shaking, my bacons?
Not a whole lot, man.
Oh, I wouldn't say that.
Well, yeah.
It's been a great day. Where do you want to start, Netflix or Tesla?
Start with Netflix, and we'll get to Tesla.
All right, you guys see my charts up there in Netflix? What's up, Mike? Aaron,
let me pop them up real quick. Can you see the comments?
There we go. Perfect. All right. So, Aaron, you made a great point earlier, Aaron, about you're gambling if you do anything into earnings. There's no question about that. But I want to show you some technical stuff that happened in Netflix that was pretty incredible. That happened last night, happened this morning. We really concentrated on this one today, and it ended up being worth it. Guys, let's just cancel the flicks for now. Let's wait. And the spies. Let's just hang out for a couple of minutes, see what happens. All right. So let's go to a chart in Netflix. And we knew the earnings were coming out yesterday. I'm going to go show you guys a monthly chart, I believe it was. Check this out. Was it weekly? What was it? Daily? Oh, right. Okay. Got it. All right. So here's Netflix. It had a $26 expected move yesterday, right? So I want to show you what happened last night in this thing. This was pretty incredible. All right. So we were watching Netflix last night, and you could see what happened to this technically. This stock went up $32 and exactly hit a resistance level on our chart, almost to the penny on a 5-minute chart. And that was after going up $32. So we were able to capture that last night. And I think most people took 5, 6, 7 points on it. Didn't hold it till this morning. But it's amazing to me how the technicals work, even when a stock has earnings. And that's why we're always reactive, not proactive, right? I am never going to take a shot into earnings unless, like you said, you do it with options. That's the only way you can. Otherwise, you're 1,000% gambling. But this was just a spectacular setup from last night after going up 40 points and hitting an exact level on our charts. What's up, Rashad? Which doesn't happen very often, but it was perfect last night. And of course, we made that a focus this morning. And I want to show you today's action. This was pretty crazy. So right off the opening, Okay, we were at 273, and we had a 200 EMA. I think it was 260, 250, guys, 260, 270. So check this out. The stock exactly went down $5 and hit our 200 EMA. And we captured that trade in the first minute of the day, I think. And it went from 262 to up $10 from there within 5 minutes. Now it's kind of just hanging out. We're coming to a little support level down here now. So for those of you guys who are just joining us, everything we do here is based on technical analysis, period. We use all our EMAs and stuff to tell us when we might want to buy and sell stocks. So check out what Netflix just did off our 65 EMA. So we went from 276 to 273, right? Our 65 EMA is support where we want to buy the stock for a trade. It just exactly hit that level, I think, to the penny, and almost has given a dollar trade to the upside now. So just to tell you guys the stuff that we use, and we're doing a huge webinar tonight, Aaron, which we'll talk about later on, where I'm going to share with everybody the technical analysis that we use, and as well as talk about psychology and a bunch of other stuff. But all our moving averages, we use a 9, a 15, a 30, a 65, and a 200. That is all the moving averages that we use. Hold on one sec. Oh, there it is. Okay. So that's all the technical analysis we use as far as trying to get into trade. So there's a pretty big level in Netflix now. If we break 273 on a 5-minute, there's not much support down there. But no matter what a stock does, no matter what comes out, it's all about technicals. And always we are, at least as traders, reactive rather than proactive, or do something with options, right? Didn't trade the earnings, but it was a guess. Put sellers maybe better returns and buy callers. I think they both could have done okay, Jeff. Right? I mean, if you bought out of the money calls, you did very, very well. And if you sold out of the money puts, you did very, very well.
Yeah, so it all depends. I mean, if you bought calls yesterday or yesterday when the stock Netflix was down 5% or whatever that expired this Friday, you probably made a killing. Probably more than people that were selling puts. But if you bought different calls that didn't go up as much, who knows?
Exactly.
Full Trader. We'll drop the link for the webinar.
Yeah, we'll do it later. We had a bunch of people in the room that sold 200 puts. I think they were like $1.35, $1.40, something like that. Thinking that if it got below 200, they didn't mind being long anyway. So
we saw when Netflix got below 200, it snapped back up pretty quickly. Like it was attracting even value investors at that level. So I agree, like that was a good way to trade it if you were willing to go long at around 200 or right below it, sell those puts that expire Friday. The stock goes up, boom, you make some free cash. The stock goes down. All right, now you're long the stock that you were willing to go long anyway.
Yeah, and they opened at 3 cents this morning from $1.30, $1.40. Look, and again, it's easy, guys, to look at a chart now and say, "Oh, wow, that was beautiful. It went long." This made a low of 162 last time the earnings came out. So it's not, nothing's a layup. But if you pick a spot where you don't mind technically, getting into a trade, then you sell puts and you start a swing trade at that point.
Yeah.
So that's again, you're gambling other if you do anything else. So let's look at Netflix now.
Or Tesla, you mean?
We'll get to Tesla in a minute. Yeah, let's look at that. We'll look at some options and stuff in that now also in a minute. I just want to see where my next support line comes in Netflix now, right? On my 5-minute chart, we got nothing down $7. I'm going to have to assume I got something in between. So let's change time frames and see what we got going on here. So our 15-minute right here, guys, 271.80. Yeah, so when we don't have anything on a 5-minute chart, we switch a little bit, and I only had to go to my 15-minute to get to 271.85, which I will do for a trade because now we'll be talking down like $5 to get there. So I do have a live trading room, guys. I'm trading with my traders all day long live. I'll show you. I'm putting the order in. 273. Yeah, we'll see. It's hanging. But again, I went to my 15-minute, and I will buy some if we get to 271.85. That's the next support level. Pop a little order in there. And guys, we are trading, right? We are day trading. We do longer term trading. We do swing tradings. But day trading, I'm looking to get into a trade, make 50 cents a buck on a bounce, whether we're long or short. 30-minute is also 271.80. So we have 2 levels of support down there, on 15-minute and on 30-minute. And then we got a nice gap. So I would think we'd hold the 15 and 30 if we spike down there quickly. We'll see what happens. So that's been our focus all day. We were, I think we caught 1 or 2 good trades and we were basically done for the day. Let's talk Tesla. Let's talk Tesla. All right. So the expected move in Tesla tonight, guys, $14. I think. Let me just check again. If you guys have Think or Swim, which we all do for charting, here it is. If you just go to the trade page and type in the stock, it'll say here in gold the expected move for the stock. So Tesla on average is expected to move about $16. That could be up, that could be down. It used to be $30, $40, $50, when it was an $800, $900 stock, but expecting a $16 move tonight. Oops, I don't want to do that. Cancel. All right, so we'll go to Tesla, and I want to show you something from Tesla early this AM. Again, technical analysis, right? Check this out. Check out when we hit our pivot point down here. That was right at 217.75. Okay, we use pivot points to find support and resistance. It hit that level almost to the penny and went up $4 from there. So technical analysis. All right, Netflix is breaking down a little bit. Let's see if we get to our level. And I heard you guys talking, there's a debate on Netflix. Were the earnings good? Were they bad? What's next quarter going to be? It doesn't matter to us. We're technicians, right? So it's always better to be reactive rather than proactive. No, Bull, I don't use 9 and 21. This is just what works for our 5 different trading techniques that could possibly set up for us. I never tell anybody what to use. The things that I'm showing you in the technical analysis that I'm showing you, it works for us. And, we make money on a lot more trades than we don't, right? I'll show you guys the SPY when we got the bottom of this not too long ago when it first hit 362. Just want to show you guys this right here, right? And we were watching this area coming down from 470. It hit our 200 EMA at 362. Not cool? And we ripped all the way up. We hit it again. Never do the trade the second time. So I was hoping, and we didn't get that far away. And this, again, is where I'll be a little investor again. 342.15 is our monthly support on the spiders. That would put us down about 30% if we got down to that level. So that's why I'll be looking to start buying back in, longer term on a bunch of stuff. And then we got 241. If we get to 241, we're going to have a lot bigger problems to talk about than me and Aaron coming on here for an hour and bullshitting.
Yeah, I see David Lynn in the chat saying my mic's hard to hear. Is this is that true, everyone, or are we okay? I'll get my mic fixed. David, can you hear me okay?
I got you fine, yeah.
All right, beautiful.
Yeah, look, bonds are getting smoked again here, right? That's not good for the market. Yields are going up. We can see the spiders are coming in a little bit. I still like Netflix. We'll see if the spiders breaks this morning's low. 367.50 again. This is yesterday's low of day. That could be a little spot for support. It's the only one we really have coming in. All right, let's talk about Tesla for a few minutes. Okay, so we know there's a $15 expected move tonight, right? All right. There is a giant level here on our weekly chart. I want to show you guys at 187.25. All right, so that is what moved from here, 20 and 13, a $33 move, right? So if you don't mind being long Tesla from $187 and down, let's go look at a put option. I'm sure they're going to be jacked up. I don't know how much you'll get on that. But let's see. Let's get our option chain up in Tesla. All right. So where are we? We're trading at 220. So 200 puts are $2. That puts you long at 198. And then 186 puts, it's not really worth it. They're only like 75 cents. But if you don't mind being long, again, this is the only way I would play it, right? You can do a call or a put thinking you get a $30, $40 move. That's fine. What's a 250 call going for? Let's take a look. 250 calls $1, $1.06. So look, if you want to take a shot and you have an opinion in Tesla, you might want to look at a 250 call. I mean, this thing could go up $30. They're only $1. And, 190 puts are down where? $1, same thing. So I'll be looking at that gigantic level at 187, certainly for a trade. And if I wanted to get into this long term, that could be a good place to start. So you can sell a put, or you just where you'll get long the stock there or collect the premium. As far as the upside is concerned, what do we got? Yeah, like 250 is a weekly. And a daily 30. So my thinking is like 186, 250. That's what I'd be looking at in Tesla off the earnings. Doesn't mean that's going to happen, but that's what I would be. That's what I would be looking at. 186.
So a little bit more than the baked in expected move right
A
now.
lot more. Yeah, which is, to get to 186, we're going down $33, and get to 250, we're going up $30.
I agree. I mean, I think we're at a point right now where it's like I don't think Tesla's moved as much on its last few earnings, but this time it's coming at kind of a pivotal point in terms of the chart, in terms of the overall market. So I would expect to see a bigger move tonight than what the market's implying right now.
I mean, if we look at just the daily chart, we're still in this big downtrend until we clear like 233. It's been better, no question about it, but 233 is the daily trend line, 15 EMA. So there's a few ways to play it. I mean, I'll look at 233 for a first resistance tonight because that is exactly up like $13, almost the exact expected move. So we're going to trade the earnings live tonight in our room. So 233 would be a big level to the upside. If it gets above, it's probably a good buy. If it can, it's probably a good short. And it's exactly the expected move. So we'll see.
Jay Rice is saying it's almost a 2 standard deviation move.
Look,
we'll see.
I mean, we've seen that happen. Netflix a couple of quarters ago went to 8 deviations, right? It went down 200 points or 170 points. So.
Remember Snapchat had a couple crazy ones.
Yeah, and Meta. Remember Meta? It was a while back.
Yeah.
But
Meta
had that
28% in one night where it was wiped out
absolutely.
like over a...
Exactly. So you don't know with these things. Again, options is the only way I would do anything if I was going to do it. And we'll just trade it when it comes out. Still like the Netflix down at 271.85, guys and girls. TBT is running up again. Yes, Mike, that is not great for the market. What's oil doing today? Oil's had a little bitty bounce. Correct, Jay. 85% that Tesla is not going to do that. But whatever. If you're willing to throw a few $100s on it, you go 187 put, 250 call. And all you can lose is $200, $250 if that's what you want to do. Well, I'll trade it when it comes out. Netflix was a spectacular trade last night. So there's trading opportunities also for those of you who are day trading. As far as the overall market's concerned, guys and girls, I guess we should look at that.
Yeah, I'm curious. I mean, like, you sound like you're still pretty overall bearish. You're saying there'll be an investor if we get down to 350, whatever. But you don't think there's a chance that we've, last Thursday was the worst of it. We saw the volume spike up. That was it.
I don't know. Thinking gets me in trouble. There are a lot of people, and I said it when it was happening, who are going to come out and say that was the absolute bottom. That was capitulation. That's what we needed. It was a tradable bottom, that's for sure, right? 100%. It was a tradable bottom when we hit 348. Look, here's where we are on a daily chart. All right, so we had a nice rally up. We couldn't get above our 30 EMA, which I think happened 2 days ago, right? Around 375. So that was rejected. So now our support level becomes around 366 right here, guys. This is our trend line if we're going to hold this uptrend. So I think if we break 366, then we got room to the downside again. It's all technicals. So if I'll watch this, if we get around 366 and it looks weak, that'd be a place to be a good short, or maybe buy those 340 puts and see what happens. For me to get positive on the market, let's see. First of all, we got to get back above that 375. Let's go weekly and see where we're at. Yeah, I mean, look, this is exactly what we did on our weekly chart. We couldn't even get above the 9 on the trend line, right? So I don't see how you can be that positive, Aaron. That's the bottom line. I mean, we could not even clear this downtrend on a weekly chart. So until we do, that's 375. Then we get 383. Then we got 397. Then we got 406. So a lot of work to do. Again, sometimes this work can be done in one day. I mean, we've seen that happen before, right? But there's still so much uncertainty. We still have Russia. We still have the Fed. God knows, well, I think we know what they're going to do in November, right? I think they're going to give us 75 basis points. I think that's almost baked into the pie. You know, are they going to stop? Are they going to change their language? Russia, there's just too much uncertainty right now. So I don't see any major rallies until some of these things sort themselves out. The most important, I think, being the inflation numbers, right? So we'll see. I don't think we have anything this week. I think the next big thing we have is the Fed is the first week of November, right? I believe.
Yeah, it's in about 2 weeks. I mean, like you said, I think the 75 basis points is basically baked in. It's you know, I think right now, like you said, there's one thing to focus on the charts and just look at it day to day. What are we doing? You might be better off doing that right now than trying to figure out what's going on the macro stuff, because who knows? Like you said, we don't know exactly what the Fed's going to do. We don't know what Russia's going to do. There's all these uncertain things. I think for what I would give is if you told me I had to give a bear case and a bull case right now, my bull case would be that all these things we're talking about, the Fed, Russia, the market knows about, and that's why we're down 24% on the SPY or whatever we're down, and you know that those things have been priced in. So I think some people arguing that
No question.
it's priced in to a point, right? Like priced in right now. But then if the Fed says, "Oh, we're changing our Fed target to 5.5%," that's not right, you know. So we don't know.
Yeah, if the numbers don't improve, they're going to have to shift again, right? You don't look. The one thing I do know, okay. The one thing I do know is if you're a long-term investor, it's a good time to be, you know, adding to your positions in good stocks. I'll say that, in good companies, because, you know, if you have a 3 to 5 year time horizon, this stuff's going to be gone. It's not going to be with us for 3 to 5 years. We've seen drawbacks like this before, and they always end the same way. When this first started, I told everybody, I think this one's going to take longer because there's a lot of things going on. You know, when we had COVID, we came on when it was happening and said it was a generational buying opportunity because that was going to pass. Whether it took 6 months, a year, whatever it was. And once we could deal with the worst of that, we made new highs, you know, within 4 months of that, right? But it was one thing. You know, there's a lot of other things we have to worry about now. And I think it's going to take a lot longer. But, you know, if you're a young investor, of course, you got to be adding to good stocks down here, 100%. And then you close your eyes and you don't look for 3 years. So depends on your time frame, right? I'm an old guy, so, you know, I've been out of the market for a while now, looking for spots to get back in. And, you know, when we first hit that SPY at the 362 level, right, we got back in. And we rode that from 362 to like 430 in the SPY.
You started to nibble at the 362.
Yeah. No, we got back in. I started with 25% there. I would have added if we went lower. Couldn't get any more. And we got out up here when we got to the 425, I think 430 exactly we got out. And it went to 431 because, you know, that was a 20% gain in, you know, a couple of months. So, yeah, I am looking, because I'm old, I'm looking for some opportunities to get back in the market. And 340, 342, whatever that is, will be the first spot where I start looking for that. But if you're younger, there's no bad time to be buying good stocks, right? But even that being said, I always like to talk about this for a minute too, okay? Because let's go to a monthly chart in the video. I'm doing this one for Robert, right, who's in my room. When you're in long-term trades, guys and girls, it's okay to take profits once in a while. And it's smart to take profits once in a while. Even in your longer-term 401ks or whatever it is, you know, it's only capital gains if you hold on to something for more than a year. But, you know, did anyone at 346 think the video would be $120 in 8 months? I don't think so. No, I didn't either. No way, no how. Nobody did. But, you know, if you take advantage and you sell things from time to time when you have a 50, 100, a 200, 1,000% gain, that just gives you the ammo to, you know, jump back into these things at the right places. And look, nobody thought this was going to 120. I mean, nobody, right? Will it ever get back to 346 again? I don't know. I have no idea. Will it be a lot higher than 120 again? Yes, 100%. It'll be a lot higher than 120 again in time. So if I look at my monthly chart in the video, my next spot is $60. Check that out. That's my next actual spot. Is that ever going to happen? I don't know. I doubt it. But we'll see. Again, that's technicals, right? Yes, God forbid. If Nvidia goes to $60 again, we're gonna have bigger fish to fry than worrying about getting together for an hour. So to me, Aaron, if you're pulling my leg, I think the path of least resistance is still down from you. If you're absolutely making me make a call, and you're gonna have these rip-roaring, in-your-face bear market rallies that are gonna bop in here from time to time. Look, just listen to Kramer, right? Kramer's the best. He's got the best handle on this stuff of anyone that I have seen lately. And I'm just kidding, guys. They're launching the Kramer reverse ETF soon, right? The S Gym and the L Gym. I think that's coming soon. There's going to be 2 ETFs where you can go long Kramer or short Kramer.
Yeah, I don't. That's so interesting to me because I mean he talks about 100 different stocks every day. How are they going to keep track of that all?
I don't know. I guess the stocks will be in an index, the ones that he talks about. Whatever. He's another one. Again, guys, this is not normal what we're going through. But he loved some of these stocks. 100, 200 points higher. Meta and Nvidia and all these things he loved. And he's not alone, right? You have a bunch of fund managers who, I think the one we can talk about, and it's just interesting to me, is Bill Ackman. And he took a $400 million loss. I think it was Netflix, right? He got in at one point, whatever it was. He was wrong. He lost $400 million in it, but, he got out of it. It's gone down another 300 points since then. But, yeah, it was Netflix. So when things like this happen, nobody has a handle on this market. And all fund managers, guys, get paid to be long. I mean, that's the bottom line. They're not shorting stocks. They're, long-term investments. And when things like this happens, it's tough to go through it. So, but it is what it is. My whole point for trading and even investing, there's no such thing as can't keep going up and can't keep going down. Right? Yeah. Jay, he says to sell one day and he says to buy the next. So who can keep track? I certainly can't.
Dave, let's talk about the webinar tonight for a little bit.
Yeah. Okay. So tonight at 7 p.m., I think we have like 1,300 people registered already. At Wall Street Global Trading Academy.com. We call it an emergency webinar, but every time we do it, we call it an emergency webinar because we know how difficult these markets have been. Look, we cater mostly to the beginning, to day traders and short-term traders, but we do some longer-term trading options and swing trading. But this has been the most difficult trading market I have seen in my 35 years, and there isn't much I have not seen. I've been through crashes. I've been through since 1984. I've been involved in the market. And this by far has been the most difficult trading environment that I have ever been in. Peter says it all the time. You can be right for $1 and wrong for $20. Even intraday, we've had the most 1% moves in the spiders in history. If we don't have a 1 or 2% move every day now, it's it's a non-event, which doesn't happen very often. So we do in a webinar, we talk about everything from how to open up trading accounts. I'm going to talk a lot about psychology. I'm going to share all my technical analysis, show some trading setups, and just hang out for a couple of hours. It's 7 o'clock tonight. It is free for all who want to come in and hang out with us.
Beautiful. And you can go to the WSGTA link for that?
Yes, WSGTA.com, and just register. Wow, Labu, we've been in and out of. I'll talk about it for a minute. We've been in and out of Labu by sometimes selling puts and sometimes buying the stock. Somewhere below $6, this is probably all right. But I hate trading stocks that are only $6. LabD, and guys, this is the biotech index, by the way. LabD.
And they're leveraged, correct?
Correct. 2 and 3 times. LabD, I would rather short when it gets stretched out than buy Labu. But we're not. We're just kind of hanging around these areas. Nothing extreme yet. When we're looking for swing trades, we're looking for extremes. I want things to move significantly from their closest moving averages on a daily or weekly basis. We looked at a little Boyle this morning, right? This is the Nat Gas ETF, which we trade quite a bit. And we're down from, $52 in 6 days, but it's not stretched out on any chart yet. We're kind of just hanging around here. If we get down to about a 20 RSI in Boyle, we'll start buying that one for a swing trade. So we trade everything. There isn't anything we don't trade. A lot of times we're trading during the day. I have no idea what the stock does or what it is. So before my time is up, guys and girls, and I don't know how many people are with us today. One of the most important tools that I use, guys, is Benzinga. It is by far the best news service that is out there. We couldn't trade without it. It is a tool like one of my moving averages, same exact thing. I think you got, Aaron, the 2-week free trial. Is that still up for grabs for anybody?
Yes, sir. Pro.benzinga.com.
There you go. We'll post that link too. It's just a tremendous tool, guys. Scanners, news. Sometimes we catch something off Benzinga, and we can make a trade in it that pays for it 10 times over in one trade. So, got to have that as part of your toolbox, guys. 150%.
Absolutely have to. Again, free 2-week trial, no credit card needed, no reason not to try it out. Dave, let's see if we've got any other stocks people want to check.
That's fine.
Out.
All right, so our spiders are breaking down a little bit here, guys and girls. So this becomes a very big level. Let me go back to my daily and see what the big level is. 365.93, 366. So because that's such a big support level, I will definitely buy spiders if we get them down around 366 for a trade. Billionaire, just you have the course, right? God is going to bless me. I'm already blessed, billionaire. But thank you. Yeah, you have the link. If you don't, let me know. Guys in my room, if anyone needs a link, just go to Wall Street Global and you don't have to be a member to sign up for that. So we got SPYs, a little support coming up, 367.50. I don't even know if I do that. And 366 is the gigantic level. So while we're hanging out, guys, we can answer some stock questions. Let's put an order down at 366 in the SPYs, and I would be aggressive down there if we spike down. So let's put at least a full order down there. And we'll see what happens if we get a bounce off this 367.50 or not. All right. What do we got, Aaron? Anything?
Let's see. Money Mitch wants you to check out
Yes,
SOBR.
Melanie. One second. Melanie, Peter is my partner.
Yeah, how's Peter doing, by the way? You said he got sick the other night?
Yeah, he got COVID again. He's doing better now. It was worse a couple of days ago, but
Good.
Rough. This is like the second or third time he's got it. But Melanie, yeah, Pete's my partner on Wall Street Global Trading Academy and a bunch of other things. TLT. All right, we got anything?
Money Mitch wants to check out SOBR. I think it might be a cheaper stock, though. I'm not quite sure what the price is.
We'll check out anything. Yeah, $3. So what I always tell all my traders, okay, is you can have a portion of your portfolio in some of these stocks. I call them lottery tickets, right? It's not something that we would ever trade, but I call it a lottery ticket. You want to have 10% of your total portfolio in a few of these things. The stock was $20. It's a lottery ticket. Sometimes they pay off. We did stuff in Fubu about a month ago. Thank you, Melanie. Where we bought some options and we got made like 700% on them. So some of those things you can have. I don't know anything about the company, but I'll just say for everybody, you want to throw a couple of bucks at some of these things. You never know when you wake up one morning and, some of these $60 stocks are $60, 60-cent stocks are $60. So who knows? Let's see. We got MM is another lottery ticket. I don't have MM. SBLK. SBLK. Let's take a look.
30% dividend stock. What does that mean? Never heard of that.
That pays 30% SBLK?
There's no way, right? It might be after like a
might.
Or something. Well, nothing's free.
Yeah, I mean, this pays a $2 dividend per share. Wow. That's pretty cool. I don't know what it is, but that's not bad. I don't see anything on a chart, daily, weekly, or monthly, but if that dividend is safe, that's incredible. Right? That's incredible. I don't mind having something with 30% dividend yield.
Detroit John's asking what's going on with the 2-year Treasury bonds.
What's going on? No, that's dipping a little bit now, but the yields on all treasuries are going up. The dollar is probably weak again. That dollar's kind of hanging in here. I guess when people are getting in this kind of environment, I guess some people are happy getting 4.25%, rather than being in the market, right? There's a new member. Welcome, Eliando. You made a great choice jumping into Benzinga.
Woo! Yeah, Zim, a shipper. A lot of the shipping price though, the cost for freight, has been crashing down. You can see that in the charts when you come out here on a daily and zoom out. This thing was like, I forget, this thing was over $100.
I'm looking now. Let's go right to monthly. Yeah, so here's the thing in some of these things, okay? So the stock has gone from 91 to 24, right? What good is the dividend they're paying you if the stock has gone down 70%? So that's why sometimes you got to be careful with these things, right? Oh, it's a beautiful dividend paying stock. Yeah, well, it's going to take me 20 years to make back what I lost on a stock in dividends. So not always running into things just because they pay a good dividend. Now, at these
100%.
prices, it's probably okay, right? A lot better than where it was.
100%. All right, Dave. Well, it looks like we don't have too many questions flying in the chat, so I'll let you get back to it. I'll let you enjoy the rest of your Wednesday and prep for that boot camp tonight. Again, I'll drop that link in the chat, wsgta.com. Free webinar tonight with Mr. David Green, as well as Peter Tuchman, the Einstein of Wall Street. I'll be there. You guys should definitely join as well. Yeah, Dave, any final words of wisdom, parting words you have for us today?
No, I got nothing.
All right. All right,
man.
We'll talk,
guys and girls. We'll talk to everybody tonight. Aaron, thank you for the opportunity again. Always appreciate it. Of course.
We'll see you next week and tonight as well. All right, guys. David Green, WSGTA.com. Again, go check out that webinar tonight. Should be a great one. Again, I will be there. We need those emergency webinars this time with how the market's been recently. Let's go ahead and get our Benzinga Pro pulled back up. We'll go see if we've had any big news headlines since Dave came on. S&P 500 hanging out down about 0.7%. Basically where we've been at. We can go check it out on a 5-minute chart and see. When we started the show back where we were at. We were a little higher when we started the show, but we're still watching these key levels. 364, I believe, is what options Mike said we had to hold. RIP headphones users. Yeah, that was bad. I agree. Mic levels crazy. I don't know. I'm gonna do some Tesla Lottos for earnings tonight. I haven't figured out which way I want to play it. Let's look at it on the daily. I mean, the chart overall looks pretty ugly. Although, now we're right at this previous support level. Could I see a potential bottom here? Yeah, I could see that. I looked on the options chains, and the calls looked really expensive. Like, let me look at it right now. Yeah, I mean, oh, man. The 250 or the 260, I guess they're not too bad, actually. Like 260 calls. The stock rips, it would have to go up almost 20% from here. Only 61 cents. I don't hate that. Or 73 cents. Do I want to play it on the short side or the long side is the question. Tis the question. VWAP earnings reversals. The only way to play earnings season lottos are stupid. Yeah, I agree. I mean, the lottos are stupid, but they're fun. And if you hit them, and they're nice. Let's see. Catching up on the chat. Oh, I got my man Money Mitch joining us in the background. Wonder what Mitch has been watching outside SOBR. What's that? That company makes like breathalyzers, right? Let's see, overview. SoberSafe is engaged developing alcohol detecting devices to address automotive. Yeah. Companies develop alcohol detection service, something like a breathalyzer. I don't really know. Looks like the company beat on earnings or something, up 25% today. Is that what happened? No, maybe not. On large industrial customer win. Sounds like they got a new deal. Good for them. Mitch, hop on whenever. Let us know what you're watching.
What up? What up?
What up, Money Mitch? How you doing today?
Not too bad. Trying to deal with this market. Just been playing a little oil today. Had an earlier trade on Exxon Mobil. I've been seeing it hold up after the EIA releases. We got some crude inventory releases, and I took a look into WTI and started seeing the oil started spiking in price recently, just from around, I would say around 11:30, we started really getting a spike in crude. So I'm taking my shot. I'm actually long right now, Oxy. And just to kind of give you an insight, I'm a little bit into the red right now. So we'll see what happens. But I'm off by like 4 cents right now. I'm just trying to see if Oxy can start catching up to some of these other trades out there. XOM has been a really good trade today. You guys can take a look at some of the if you want levered kind of look, you can look into Gush. Gush has been right there at the top of the range. So that's why I'm taking my shot a little bit on Oxy today. Chevron has also been a really strong stock in oil today, just hanging out near the top of the range right now.
Yeah, you can see Chevron here. It kind of took out previous high right here in August. Now, really looks like it's got room to run back up to 180. It's all time. I've been saying this about the energy trade. It really comes down from a macro standpoint is if you think we can avoid some sort of overall, recession here in the U.S. or in the globe or around the world, really, then these stocks are good opportunities because even though they're at or near their all-time highs, gas is going to remain expensive for the time being, right? Like these companies are going to make more money over the next few quarters than they have in the past. So I have also been looking at a bunch of these oil and gas companies. Oxy, like you mentioned, that's one of Warren Buffett's favorites. Definitely been on the watch list for sure.
We'll have to say and see if we're going to get I saw a lot of people talking about, but it's the worst day ever. Black Monday, or was 35 years ago. Quantum. There's a lot of people being kind of negative right now. But I'll tell you one thing, the SPY is hanging to this 368 like it doesn't want to leave. So right now, I don't feel like the market wants to break down because it's been down here and just hanging out by this 368. And Netflix still up higher, and it bounced off the VWAP right now. So I was taking a look at that position also. Netflix continuing. And what do you think about them beating out that subscriber? It looks like people can't miss out on their Netflix. Might be missing out on some of their groceries, but not the Netflix.
Yeah. Well, I think the report was more mixed than the market's kind of making it out to be.
Yeah.
Right? I think, bears could argue that revenue growth was really slow compared to what we've seen in the past. I think there were people out there that were bearish the stock that are looking at the report saying, you guys are all celebrating this. It's not really all great. I can kind of see both sides. I do think, like you said, I gave this point on Netflix on the show the other day. If we were to head into a real recession and stuff and people are cutting costs, I actually don't think Netflix is an area people would really be cutting a lot because think about it. You can save money by paying $15 a month on Netflix, and then you're not going out as much, and you're not going out spending money. You're not traveling, whatever. You have all this entertainment for $15. It actually ends up being pretty cheap. But we'll see. I'm not convinced. I don't think Netflix is out of the woods yet. I do think if I had to be bullish or bearish here, I would be bullish. But yeah, man, I mean, it's good to see companies coming out of earnings green.
Yeah, and I think that, I think the market is a little bit kind of like it wants to lean to the bull side. It wants to break out. Everyone wants to go long. Everyone wants this earnings reports to not be as bad as people think they are going to be. So Tesla's going to be the big one today. I mean, if Tesla, beats, I mean, we could just start rallying, I feel like. And there's open room back towards 380. And I feel like the market's just been hanging on here. And I thought that the Netflix report could possibly be that report to get us started. But I feel like we're going to wait for more of the generals like Tesla and then Apple the following week. That's what's really going to determine the markets, especially into Q4.
Well, something I've been thinking about too as a potential trade here that I think has good, I don't think I've been looking at Twitter, and here's my thought process. Some out of the money puts on Twitter that expire, maybe like the November monthlies. If you look, you can buy like the $40 puts for pretty cheap, 68 cents. Something could easily happen in the next month where this deal doesn't look certain, especially too with Tesla. If you think about if Tesla has bad earnings or the stock goes down another 10, 20%, Elon's going to have to be thinking about, the money aspect of this deal as well.
Exactly. I mean, everyone's been waiting for the earnings to get through because you can't sell until after the earnings get through. And so some people are watching to see what happens to Tesla, not necessarily only for the earnings report, but moving forward from that earnings report, do we start seeing Elon sell some more shares? Well, that's always a potential, right? I mean, if he definitely needs to close that Twitter deal, he's going to need some more money. It seems like a lot of the investors that were trying to join in with him have been backing out of the deal, and he's going to get left paying the bill. And it seems like, I wonder if this is going to actually be in the long run good for Twitter, or will it be bad for Twitter going to go private? We're going to have to wait and see. Now,
go ahead.
Go ahead.
You got it.
All right. Now, one thing that I wanted to kind of take a look at is your overall look going into kind of this season with Apple. I don't know if you've thought about getting a new iPhone. Which one do you have right now?
I believe I have the iPhone 13. I had to get a new one last year. I lost it driving home from work.
You left it out somewhere. Hey, happens to the best of us. Hope you had insurance.
I stopped for gas. No, well, it was weird. It was a whole thing. I stopped for gas, and I think I either left the phone on top of my car, or it just fell out of my car at the gas pump. Either way, I legit lost it driving home from work.
I did that one time.
Went through AT&T, and I think like for whatever reason, and they were having a deal on phones where it ended up being cheaper to just like buy a new one for like $150 or something. I have no clue, but it's the iPhone 13.
Apple's pulling back right now. I've been looking at that, and it seems like there's more and more reports. And it's been, it first started with, was it Wall Street Journal? And then they're all coming out there and just kind of attacking Apple for their iPhone production. It's going to be important for them to kind of, let us know what's going on with that demand in their earnings. If they do say that production's kind of getting cut, will that really hurt Apple? I mean, going into a holiday season with recession, consumer concern, definitely not what we want to be hearing about the iPhone.
Yeah. I mean, Apple, it's so important for the overall market. Earnings come out, like you said, 8 days. Thursday, October 27th, after market close. That'll be a big one for Apple, because if the earnings are bad for Apple, and the chart doesn't look amazing here, I gotta say that, then the overall market could be in some trouble there.
I was taking a look also at Ally Financial. They fell hard this morning, and that was even a Warren Buffett favorite. He even had bought some Ally Financial, and it took a big hit from a $438 million provision for credit loss. That just shows me more and more. I mean, are we really starting to see some consumers kind of give up on some loans? I mean, that kind of mention there, it just leaves more worry for me that I think you're going to start seeing some more delinquencies. And so it's going to be trouble to see what happens going forward. Are we really going to start seeing the recession hit, where you start seeing delinquencies and kind of the unemployment rate moving up? It could be right around the corner, at least from what we're seeing.
Yeah, of course. I mean, right now, you can't be trading this market. You can't be investing without keeping your, without staying up to date on everything on the macro level. Because, look, at the end of the day, we're still dependent on the Fed here. You don't want to be fighting the Fed. So as long as the Fed's going to remain hawkish, it's gonna be hard, I think, to really expect any sort of meaningful rallies in the market.
Looks like we're starting to crack down, and no Mitch show today. Yeah, no stock market movers. We're just gonna kind of we'll lead you kind of until the end here. I just wanted to hop on at least take a look at some of the things that I was watching, but I don't have any guest on today, so didn't want to set the expectation to have you guys hang out with me and just talk about headlines. Netflix pulling back now. The SPY just broke that big support. Now are we going to start heading down? I mean, it's a tough market to call day for day, and now we're starting to break there a little bit. Banks pulling back. I see JP Morgan there.
Yeah, well, it looks like I was checking out JP Morgan, seeing some of the other bank stocks, seeing if they were moving off the Ally news. Looks like Bank of America coming down a little bit too. And I mean, those bank stocks have been so strong the past couple days. Not surprised to see that. Yeah, no, the Find My iPhone didn't work for me because I was in the phone had like already been. I don't know. It was a gas station, like leaving the office here in downtown Detroit. Probably wasn't the nicest area. Probably got snatched up pretty quickly when someone saw a new iPhone. I went back to the gas station probably about 5 to 10 minutes after I realized that I had lost it. So either way, it was a silly mistake on my part. Had to get a new phone. I've been hearing the iPhone. I think the iPhone 14 demand is a little down this year.
Yeah, it just doesn't seem like they're getting the sales that they expect. And I think a lot of that is just the consumer a little strapped for kind of products like that. You know, there's one thing like buying like an airline ticket because you want to visit family. There's a whole other thing just saying, well, I got to replace the phone that already works and I just need a newer one. Well, I mean, that's going to be for people that really kind of need the phone right now. I don't think that anybody's just like, well, I just need the next year one right now. Got to have it. It really didn't change much. And I think that's another thing to notice is that eventually does the consumer finally get to the point where they're like, well, the iPhone's not really different, right, than the older iPhone. I mean, you do get some improvements, but there's really no change. And if you had the year prior, you just download the new iOS, right? And it's very similar to what the new product is.
Yeah, I think I had the iPhone like 12 or 11 before that, and if I didn't lose my phone, there was no way I was gonna upgrade like before it stopped working. And honestly, I tried to not, I tried to use my phone. Like I think we've gone through waves where at 5-10 years ago, the companies were trying to like make phones where you could use them for everything, and now I think people are trying to use their phones a little bit less actually. So we'll see how, like you said, how that consumer demand kind of shifts throughout the next couple of years.
Patrick saying that Joe Biden's about to speak. I wonder what he's going to speak on. But a company that I've called to zero, and I don't do this too often, and it's just because I'm worried about the kind of business model that they're following is Affirm. It's down towards, pretty low on the 52-week. What do you feel about the whole Affirm buy now, pay later kind of streams out there? I feel like this is something that in the long run, regulation is going to come out and be like, yeah, I mean, we don't want to be advertising these. We don't want to be pushing these. To me, they're like payday loans. They're kind of a little bit of a scam, right? I mean, you miss one payment and next thing you know, you owe them like 5 times the value. That's a little bit difficult to get through.
Yeah. Let's see, catching up. MD, what's up? The new iPhone has satellite reception. That's pretty cool. What I'm trying to figure out. One stock we talked about oil and energy stocks. We talked about Apple. What about Microsoft? Have you looked at Microsoft recently?
Yeah, I think Microsoft is going to get a little bit of help with their partnership with Netflix, right? They're the ones that are behind their ad tier platform. And so Microsoft will get some lift with that. But it just seems to me like Microsoft is just trying to weather the storm right now. And so, of course, Microsoft isn't going to go away. But is it going to continue pulling back? I think you still see some pullback. But this is definitely a company that you got to think about it. It's just like a lot of companies that you want to think about. You want to say, is this investment something that's going to go away in the next 5 years? Well, I think we would all answer that question and be like, Microsoft isn't going away in 5 years. So now it's just more about levels for you on Microsoft. If you're a deeper investor, what makes sense for you? And so for me, I'm looking at below kind of like the 225 level, going to the 200. I wouldn't mind taking my shot on Microsoft long term around 200. You'd get a big pullback. You start getting back there towards kind of the levels that it was before the pandemic hit. Pandemic, it was around the 190s. So I think if we get to 200, makes some perfect sense to try to take a shot on Microsoft.
Yeah, I mean, I think with these big tech names, like you have to start looking at them down 20, 30% and saying, hey, if I can hold these long term, right, if I don't need the money for 5, 10 years, knowing this is a good time to start adding some of them.
Well, Shelly, we will definitely be getting back to all day streams. I'm trying to get that set up, Shelly, and we weren't pulling the Spencer though. We're definitely going to try to do at least a little bit of extra, but ad targeting is going to get harder and harder. I think the major companies like Microsoft and Apple might be able to get around this. Netflix using Microsoft to do this, but there's other ad companies that I think are going to really suffer moving forward. A favorite for a long time, even for myself, was the Trade Desk, TTD. And I think that with the regulation change that are out there, companies like this are going to start slowly getting hit. They need to adjust. And I've been seeing it on almost every site that you go to nowadays. What's the first thing you get asked? Would you like to share?
Site?
Cookies. Cookies, right? Like it's almost like a given now when you go to a site, especially a new site, you get the question, would you accept to give the cookies? Well, this is slowly but surely changing up the dynamics in the advertising game. This is why I think Meta saw the writing on the wall and started adjusting their business model. Wasn't because, they didn't think Facebook is going away, but their driver was the ads, right? And they made the decision to turn around and make their company called Meta for a reason. I don't think it was for the reason that they saw the metaverse is getting big today, but they saw the writing on the wall on their other business, which was their ad business, as the cookies slowly go away.
Yeah, I mean, Meta down here at 133. It's basically, been cut down to a third from where it was up at almost 390. I don't know. I mean, I'm not sold on, we've seen the sentiment on social media of every time they release something from, the metaverse and it looks silly and people are like, all right, this seems like the stupidest thing ever. Why would a company invest any money into this, yet let alone billions and billions of dollars? The flip side to it is I have no freaking clue. And like, who knows what that looks like in 5-10 years. And if the metaverse is really big and Meta's the leader of it, it could be value. I mean, I don't know that from a business standpoint, if we understand the real, like what exactly the metaverse can entail for Meta in terms of bottom line, in terms of revenue, in terms of profit, I have no clue. But right now, I'm not super bullish on it.
Yeah, and it's hard to be bullish on it because you don't have a clear outlook of what their kind of business model is truly moving towards. Are they just going to focus on more products? Well, we saw them release their recent goggles, right? And those are up to $1,000. And what you hear more and more about VR and AR adoption is that we need these goggles to be cheaper because the average consumer, I don't think, is spending like $1,200 on a gaming console. It just...
No, and I do think whoever, and you got to imagine too, right? Sony with PlayStation and Microsoft with Xbox, they're working on VR type stuff too. So that, and I think the first person, and it might be Oculus, but outside of that, the first company that puts out a really, really good at-home AR, VR, system for gaming and whatnot, it's going to make a lot of money. I don't know how far away you are from that.
It's the games, though, I think, really, that are holding it back. It's not even the products because the consoles now are strong enough to give you a good image, right? Comparable to, let's say, PlayStation 5 or the new Xbox. But where you run into problems is that they don't have the brands like the Take-Two. If they had, let's say, Grand Theft Auto on VR, well, sign me up.
Scary. That'd be scary.
I don't know about you, AB, but sign me up. I'll rock those goggles and drive my car and be doing some illegal stuff in the metaverse and then take it off and have some fun. But I think that's what's needed also. They need some good brands to actually make some games for this. They need a Call of Duty in VR. We're not seeing that.
We'll need to do a deep dive on the metaverse, like a Benzinga video, a short video, and visit some of these different games, these different platforms that are available on the metaverse, and see kind of what we think about it.
Yeah, I've gone on Decentraland a lot. And so everyone out there, if you guys don't know, we do have the Roadmap show that talks a lot about these kind of NFTs and metaverse space. So definitely check that out. And if you guys haven't heard, we do got a big crypto event in New York City that you guys should check out. We'll definitely try to throw that link up in the chat so that you guys can check out the future of crypto. And a lot of that talk is going to be on the metaverse, right? I've been in like Decentraland, and the one thing that I notice it more is right now it's more like business opportunities. Like, what land can I buy and create some development? It seems like it's still building versus fun. Because when I went on there, I really wasn't having fun, really. I was just more along checking different areas out on the land and not really truly having like immersive experiences. I did see certain places play video and things like that, which was interesting because, you know, of course, it's a bigger screen. But in the long run, there's still a lot of work to be done, I think, in the metaverse for people to really enjoy it.
Apple going for Rob Roy's H pattern. Yeah, I mean, we'll see with the metaverse, Mitch. I don't know. I mean, it'll be it's one of those things that's a big question mark. I don't want to be one of those guys like you see the quotes of people saying, "Oh, the internet's just a fad. It's not going to be here forever," and people always laugh at those. So I don't want to say like, "Oh, the metaverse is the stupidest thing in the world. It's never going anywhere," and then it ends up being like actually a big deal. But I do think the idea of like, we're all gonna live our lives virtually in this world. Like, no, like, come on, like, people are gonna want to still go outside and do real things.
You're not gonna work at a online bank and literally be in in the metaverse as a banker here. Oh, we'll have to wait and see.
I haven't really put my full brain to it in terms of metaverse opportunities. If when we're making this intro to metaverse video, and I come across what I find to be a business opportunity in the metaverse, I might explore that.
Yeah, you got to take some shots. I think you always think about what can come in the next, innovations. What is it going to be? Well, a lot of what we see now is the EV, right? Innovation, autonomous driving, right? That's going to be one of the big things. Battery tech and the metaverse, a big part of that, right? I mean, I think eventually some company will get it right. Question will be, who will do that and how big will they get? Will they become like an Apple? Very much could. It's just going to take a long time. That's what you got to look for, these opportunities like you are right now.
All right. Well, it is 1 p.m., Mitch. So it's about time that
it's time to wrap
Benzinga live. I know there's no stock market movers. I don't know if we have a show at 2 p.m., but I know at 3 p.m. the Grit stream will be doing their stream, and then after pre-market prep at the close. So maybe we'll see you there. If you need any help on that, let me know, and I can hop in and hang out at the close with you.
Yeah, definitely. I'll definitely be at the close. It's going to be at 3:30. Don't miss that, team. I'll let AB wrap up. And like always, team, let's keep working to get better, because that's the only way we can do it. Let's keep working it one day at a time. Looks like the SPY is getting into the red today. But Tesla could shake this all around after the bell.
Yes, sir. All right. Oh, there goes Money Mitch. All right, guys. Again, 3:30 p.m. We'll be back at the close. Before that, 3 p.m. the Grit stream. Till then, stay green. Happy trading. Smash the like if you haven't already. Subscribe to the channel. Thank you to the new YouTube members we got today in the chat. Shout out, y'all. Guys, again, thanks to all our guests that hopped on today. Options Mike, David Green, Money Mitch, of course. Guys, we'll be back tomorrow. Till then, peace and love. We out.
This is